Let's start with booking invoices for the month of April. So again, we have been doing it for a while now, so let's continue. Practice makes it perfect. So this one was paid with a credit card, so we're going to enter credit card charges. Alright, here we are. Okay, so what do we have? We have food traders. Make sure the date is correct here. Always check your date. When did we pay it? 4/12, 12, apologies, 2020. Reference, we're going to continue using invoice number. Alright, 1,429. Alright, very good. Very good. What do we have here? We have meat products, bread products, so that's our food purchases, right? So again, let's make sure we understand what's going on behind the interface. Very important part. So we're buying with the credit card, all right? So our liability is going up. Liabilities are increased when they're credited. What else is happening? We're spending our money on food purchases and supplies, so that's our expense account, and it is going up when it is debited. So here we are, we're in consistency, our debits and credits equals. Again, it's important to understand what's going on here, right? So this is our debit for this account, and this is our credit for this account. All right, we're going to save and close. All right, next one is also a credit card. So we're going to go banking, enter credit card charges. All right, good on that one. That's our to-go packs. Paid it on 4/14. Again, please pay attention. You're entering the date you paid it, all right, not the invoice date in this case. If you're entering invoices live as you go, you would be entering invoice date and setting the terms, and we'll get to that. In this case, you're entering the date as you paid it. All right, what do we have here? We have our restaurant supplies, all right, that's our food containers and such, so we're good on that. Again, let's make sure we know what's going on behind the interface. All right, our liabilities go up and our expenses go up. All right, so here we are. These are the debits, the credits behind this interface, right? Our credit right here, our debit, right here. We're good to go, right? Let's go ahead and save and close. All right, next one was paid with the check. So we're going to write a check. Again, since we're writing them post factum, we already wrote them, right, using hand. We're not printing, so make sure this button is unchecked. Bank account is correct right here, the check number. Again, because we're posting after the fact, please always check your check number, right? Because information that you're processing might be out of sequence, like. We're going to continue using our invoice number is our memo. So what do we have here? Sounds like our cleaning supplies, right here. So again, what's behind the interface, right? So we have our account 11,100. It's going down. I'm going to credit that. Assets are decreased when credited. What else is happening? Our expenses are going up, and then expenses go up when they're debited. So here we are. Debits and credits are in balance. We're good to go, right? We fully understand that this amount is a credit right here, and this amount is a debit right here. All right, we're going to save and close. Okay, our next one is paid by credit card. So we're going to go banking, enter credit card charges. Thanks. All right. Oops. Let's go ahead and enter it right here. Our amount is, all right. What is that? That's our drinks, right? so that's our drinks. We're good to go. Let's just make sure we understand what's going on here. All right. Our liability account, our credit card account is being credited. We owe more money. It's going up. And our expenses are going up, right? All right, so here we are. We're in balance. Debits and credits are in balance. Save and close. All right, what's next? All right, we have one more that's paid by check. All right, so make sure check numbers are correct. Date is correct. All righty, so here we are. All right, what do we have here? We have our utilities. All right, we're going to continue using our invoice number for reference purposes. All right, we're going to lump sum it. Good, everything is good. Let's make sure we understand our debits and credits. What's happening? Our bank account is being reduced, right? The balance there is going down because we're paying using our checks. Again, assets are decreased through credit. Bank is an asset. Bank account is an asset. What else is happening? Our expenses are going up. So we're good here. Debits and credits are in balance, right? This amount is a debit. This amount is a credit right here. Save and close. Okay. And next one is also by check. All right, so we're going to pay that one with the check. Make sure your check numbers are correct. All right, that's our big lease company. And this one is, you know, one of our favorites, right? Because we get to book it against multiple expense accounts, right? This amount. So what do we have? We have a rent for the truck. Let's see, where's our rents? Here they are. All right, what else do we have? We have insurance. All right. We have dues and subscription, right? That's our registration fee. What else we have? We have maintenance. And we have advertising and promotion, right? We're still paying for that artwork. It might be phased out. They kind of lease it to us, but at the end of the day, that's advertising and promotion right here, right? So again, let's make sure we put our invoice number in the memo. So here we are. Let's make sure we understand what are the debits, what are the credits behind this fund transaction. So we know one thing for sure, right? Our bank account is going down, and by now we know it has to be credited to go down, right? And then we have a bunch of these expenses. We also know they got to go into the debits, right? They need to offset because we have to have entries in balance right here. So let's go ahead and do it just for illustration purposes. Voila, right? Our debits and credits are in balance, so they're here too. We're good to go. We're going to save and close, right? Again, credit right here. Debits, all of these, each one of those is a debit for corresponding account. We're going to save and close. All right, that concludes posting invoices, and now we're going to post receipts. Credit card receipts, those all go out of the credit card. Again, those we're going to post as they go through the dates that they have on them. So again, banking and the credit card charges. All right, so gas station. In this case, we do enter the date of the receipt because that's when transaction happened, right? We filled up our tank and we got a receipt. All right, good here. That's our fuel. Okie doke, good to go, right? Again, do we know debits and credits behind this? By now you do, but again, let's make sure we are consistent. So this way you know the illustration, and practice makes it perfect. Alright, so again, this is the debit, this is the credit for this account. We're good to go. We're going to save in new because we have a few more of those to book. Alright, we have another gas station receipt. Excellent. Alright. Alright, very good. Here we are. Again, debits and credits right behind it are very important. Right? Wouldn't be in balance. Here it is. It's in balance. So again, and this is our debit, credit. All right. Let's see. Save new. All right. Our cell phone bill. All right. We gotta pay that one. All right. Let's make sure we pay our mobile service provider. Can't enter the full amount, so let's go into this. So that's oops, too much. That's our telephone expense, right? It's going up. Telephone expenses go up when they're debited. So again, our credit card balance is going up. It's a liability. Liabilities go up when they're credited. And our expense account for telephone goes up when it's debited. So here we are. It's an agreement. All right. This is our debit. This is our credit for this account. Okay. Save and new. We're good to go. Alright, so what else do we have? We have a return receipt, right? We've done those before. We're returning a wiring kit. Alright, that's a fun one, right? Remember we booked some equipment in the prior month, and now turns out we need one of those wiring kits. So again, no panic. It's actually pretty straightforward. So we got to book it against the same account that we charged it, right? So we're going to go again our online market. And I forgot to do one important thing, right? We got to switch to refunds because that switches debits and credits here. So that's what we're going to do first. So we're going to clear it all out. Click right here. We covered it before. We're going to cover it again. What's going to happen here? All right, liabilities are reduced when they're debited. And so this window will become debit. So let's go ahead and do that. All right, we're going to enter full amount with tax. All right, and this is a very important part. So in this case, we're actually reducing the value of our asset of the equipment. All right, and I'm going to explain it in a moment here in more detail. So here we are. What's happening? What's happening to our credit card account? Well, the balance, the liability, the money we owe is going down because we're returning some merchandise, so the vendor will refund the credit card company, and that will reduce how much money we owe. Here it is. What else is happening? Well, we're returning a piece of, we're returning a wiring kit, and it was included in the cost of the equipment. However, it turns out we didn't need it. So what's going to happen? We're going to reduce equipment. Equipment is an asset, and assets are reduced when they're credited, right? So that will reduce the total value of that equipment that we have here. Again, in this case, we're just using account equipment. In the future, when we have more of that, we can definitely create individual accounts, and maybe that's what we'll do, is adjusting entry at the end of the year, depending on how much more equipment will we buy and what's going on, right? It's our first year of operation. So here we are, right? Everything is in balance. Again, very important part to understand. This is a credit now to this account. This is a debit to this account, and it happens when we switch these buttons, right? So right now we're in this refund mode. Okay, so we're good to go. All right, we're going to save and new. Okay, and let's see, this is our credit card payment, right? So again, we're going to stay in this module because refunds are very similar, right? So we can use this module to post our credit card payment. So all right, the money is coming out of our bank account. So we're going to select that. And again, very important to understand debits and credits behind it. Once you do, you can post any entry and fully be confident that it posted it correctly, right? So what do we know? We know that our liability with the credit card company is going down because we're giving them some of our money, right? We're paying down the credit card bill. At the same time, we know that our bank account balance will go down because we use that money to pay the credit card, right? So here we are. This amount right here is a credit to this account because this account is an asset and it's reduced when it's credited. This amount right here is a debit to this account because this account is a liability and it's reduced when it is debited. All right, so we're paying down liability. What happens? We owe less money, that balance is going down, but we're using cash from our bank account to pay it down, and therefore that is going down as well. All right, we're good to go. Save and close. All right, that concludes posting of the receipts and invoices for the month of April.